Today, we will continue our journey. We will combine multi-smart money concepts together and use price action to have trades. Of course, we'll be using our superior trading view indicator also. A great education day. If you are good to go, let's start now. I want to talk about one of my most favorite setups that recently happened in Solana. This high time frame setup generally does not happen every single day, but when it does happen, it works extremely well and performs very cleanly. I want you to notice this 1 hour imbalance area, which is also a multi-imbalance area at the same time. And it's also accompanied by this 1 hour order block, which happens to be located in a perfect SR flip, meaning a clear support and resistance flip location. However, I also want to talk about the liquidity here. If you look at this area, there's a critic equal area that is creating a perfect inducement for the fill. And on the other hand, if you look at the top area, you will see opposite situation with equal highs acting like an open potential target location for us. So overall, this is one of the great setups that I like to trade whenever I counter it. But it might not happen every single day in the market, as I said before. Let me explain it step by step in simpler terms so it is easier to understand. In step 1, you first identify a multi-imbalance area. In step 2, you are looking for a supportive structure which can be support and resistance flip or an order block, just like in this example. And in step 3, you are checking the liquidity. The first part is inner liquidity, which can act as an inducement to bring more fuel into the move. The second part could be liquidity is focused on targeting, meaning whether we have open targets and open liquidity area that can price move toward. So all in all, what makes this setup so strong is that it is the maximum fuel point right here. Because you have an order block, imbalance, SR flip point, along with the IDM, the inner liquidity acting as the inducement. However, when you open up the lower time frames, this is the moment where things get a bit tricky and more complex here for this time. As you know, when you combine higher and lower time frames, we have a strong policy to look for specific market actions. One of them is seeing a strong low time frame structure break to confirm the lower time frame trends. Just like in this case, I personally wanted to see an inner market structure break for better confirmation. However, what happened here was a different kind of a price action, which I generally call price switch, which you learned in the masterclass. Instead of seeing a structure break, we are seeing these bearish imbalances fail as a signal of weakness for the sellers. If you look at the chart, you will notice we have this gigantic imbalance failed here. Personally, I would want to see microstructure break, but it wasn't the case in this particular case. So, when you place a trade like this, you should be a little bit careful, because there's a bit struggle in the lower time frames this time. The best way to manage this style of trading is always, instead of using your regular full risk, to change a lower risk amount. And if you see a market structure break along the way, you can simply increase your risk back again. This is what I call dynamic risk management. So based on your setup, you are just adjusting your risk for higher or lower. Okay friends, I hope that you enjoyed this video. Please take care for now and have an awesome day. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.